Good morning, students. This is Dr. Balgar Jyoti, Government Women's First Grade College, Kalburgi. Today I am discussing the subject Principles of Management Accounting. In this, let us discuss today that is meaning and definitions of management accounting. The term management accounting consists of two words, that is management and accounting. So in the previous session we have already seen that what is the necessity of evolvement of management accounting. Because of that cutthroat competitions, the management is facing a lots of problem in terms of competition because of the advanced technology as well as wide range of available information. So that's why there is a need for the different system of accounting that is said to be the management accounting. As we all know that management means it is the art of getting things done through the people. Accounting is the process of identifying, measuring, communicating and economic information to the management may it be helpful to the stakeholders, bankers, creditors, even shareholders, so many people who are directly or indirectly related to the management. Actually, the meaning of management accounting. The accounting department provides the various accounting information to the management. Preparation of the accounting information to provide the management, and also it explains the utility of accounting as an effective management techniques. It's a combination of management accounting it's a combination of different systems which are going to be selected from the each technique, and that is going to be provided as a policy so that the management has to put it into a practice. So that's why we can say that management accountants are going to give the solutions to the problems of a policy makers. So that's why we can say that it is going to give all the information, that is accounting information, to the management. Next, let us discuss about the definition of management accounting. Here we are going to discuss with the J.S. Betty. He defines the management accounting system is the term used to describe the accounting methods, systems and techniques which, coupled with the special knowledge and ability, assist the management in its task of maximizing profit or minimizing the losses. As we all know that the financial accounting system, it has been made as a mandatory, and every organization has to compulsorily follow the system of financial accounting, so that they have to prepare the final accounts to provide the information to all the stakeholders, may it be shareholders or the debenture holders or the creditors or the debitors or the bankers, insurers, so many people. But at the same time, one more system of accounting, that is cost accounting, also evolved due to the problems faced by the financial accounting system. Financial accounting system has the limited information, means it is not going to give us the certain solutions to the certain problems, may it be cost control or cost reduction, which is utterly impossible in case of the financial management system. So that's why here financial accounting system, that's why after the cost accounting system, once again there is a need of management accounting system, because it requires certain special knowledge to be applied to the techniques of costing, techniques of accounting. It is a combination of financial accounting as well as the cost accounting. So here some of the systems, some of the things are going to be selected from these two aspects, and one more that is a new knowledge, a special knowledge is going to be applied, and ability. So ability is going to be put together so that it is going to assist the management in its task task may be the any kind. Either it may be the increasing the sales, increasing the volume of sales, or increasing the profit, or otherwise reducing the cost or controlling the cost or minimizing the losses. So these are the common objectives of the any organization is possible to attain only through the management accounting system. So that's why we can say that management accounting system it is going to follow the methods as well as it is going to follow the certain systems or techniques. So wherever it is necessary, they are going to select a few of them. According to the management accounting system is going to be defined by Institute of Chartered Accountants of England. They defines any form of accounting which enables the business to be conducted more efficiently can be regarded as management accounting. Means no doubt management accounting system is said to be an accounting system, but it is not only providing the accounting information, but it enables the business to be conducted more efficiently. Means the conduction of the business can be carried over very efficiently with the help of this management accounting, because for every problem it is going to find out the root cause and then it is going to give the special solution in terms of the techniques to be applied. So that's why we can say that the management can be more efficiently followed or conducted with the help of management accounting system. And it is also it is going to be renowned as a system for gathering data and other financial information primarily for the internal needs of management, and it is designed to assist the internal management system. As we know that financial accounting system is not only for the internal management system, internal accounting system, but it is going to be used for the stakeholders also. Wherever that company is going to issue the shares and debentures, the shareholder, the public will use its final accounts as the window through which they can look into the progress of the company. So whenever they want to invest their money, they are going to first see first they are going to inspect, they are going to get the information regarding the company's progress through these final accounts as well as some mandatory documents. But management accounting is purely for the internal purpose. Means it is for the management of the organization itself, so that it is going to be designed in such a way that it helps in the management to function its business so smoothly. So here the accounting department of a business organization provides various accounting information to the management, such as information helps the management in smooth running of the business. So means without any ups and downs, without so as we know that the financial accounting is going to give the final statement of profit and loss account at the end of the year, which is going to give you the information about the profits only after the completion of one particular year. But by the time that we can't make any changes in the previous system, or the history can't be changed, but we can only use this information for the future purpose. But here in case of this management accounting system, so every quarterly, every monthly monthly statements are going to be taken, and then they are going to be, performance is going to be appraised, and standards are going to be fixed, and actuals are going to be compared with the standards. Then they are going to take up certain decisions. So that's why it is said to be an improved system, improved version of the accounting system, which helps for the internal management to run the management in a smooth way. In other words, the term management accounting refers to accounting for the management. Obviously, the name itself is indicating that it's a management accounting. So it rearranges the accounting information for the purpose of management control. Rearranging means the same expenditures what the final accounts are going to give. The same expenditures or the same information what is being given in the final accounts, financial accounting system, the same will be used and classified in the different way to study the expenditures. In case of the cost accounting, if you take this marginal costing, the same expenditures are going to be classified in the form of fixed expenditures and variable expenditures. If you take in case of the cost preparation of the cost sheet, the same expenses are going to be classified in the form of direct and indirect. But in this way, here the management accounting system also, the same information is going to be used to provide the various to provide the information for the various problems. Either for every problem it is going to get a different solution. See, take for example, in case of this year, if there is a high expenditure in case of the advertising when compared to the previous year, then which month they have increased the budget for the advertisement, what is the profit benefit cost ratio, then they are going to decide that whether that cost is to be increased or decreased or should be remain same. So such all problems in every aspect of the work, we can make decisions with the help of this system of management accounting. So that's why we can say that the function of the management are planning, organizing, directing, controlling of a business operations to the management in every walk of life, since right from the beginning of the planning till the end of the business operations controlling. So everything is possible. For every problem it is going to give certain solutions in the form of techniques. It is the process of identification, measurement, accumulation, analysis, preparation, interpretation, communication of financial information. Okay. So detailed information has been given by this here. It is a process. Process means it is the system one after the other what we have to follow. Means it is going to give the step by step system or the process how we are going to follow the management accounting system. Then it's a process for identification, identifying that what is the root cause, means diagnosing the problem, diagnosing the system. Then they are going to take up that what is the necessity, why there is a less or more of the expenditures. Then it is going to measurement. Measurement means with the help of this management accounting, they are going to compare the things, comparing through the stuff by fixing the standards earlier, and then the actuals are going to be compared and measured. And accumulation in the sense like wherever that information is necessary, it is going to accumulate or collect the information from the, either if you are going for the purchasing of a materials. So for purchases, there are so many different departments have to provide the information. For purchasing the materials, not only the purchases department information related with the purchases, but they have to gather the information from the marketing, from the stores department, and then they have to gather the information from the production department, manufacturing department also, so that all are interrelated or connected. So that's why here it is said to be an accumulation. And then analysis means analyzing the things, what is right and what is wrong. Then preparation, making the information in a solid readable. So here the qualitative information is going to be converted into the quantitative. So means for everything they are going to provide the numbers. What is, if it is more means how much more, if it is less means what is the less. Either it may be in the form of percentages, or it may be in the form of ratios, or it may be in the form of fractions. Then it is a preparation. Preparation means how it is to be solved, what should be your ratio for the next year, what should be your fractions for the next year. Then they are going to interpret the system. Interpreting means whether it is good or bad, or giving them the complete idea regarding the problem and putting the solution to the problem. And these are all the things are going to be done by the management accountants. But the work of the management accountants will not fulfill until that information is being communicated to the financial information is communicated to exactly the persons who are executing the policies. So that's why we can say that communication of financial information in order to plan the formulation of policies, and by that you can exercise the control. Naturally, wherever you are controlling can't be done all at the end of the year only, but it should be started with the every spare of the life, every work, means in every department, in every period of over a period of time, they have to keep on inspecting the things, verifying the things, and then they have to analyze, then they have to prepare the statements, then they have to be communicated. In the same way, they have to plan the formulation of the policies also important. Next, management accounting is a part of accounting that deals with the accounting and reporting. So the ultimate aim of management accounting is, first, it is going to prepare the things, prepare the reports, and then that is to be, the same reports are to be communicated to the management regarding detailed operations of the company for decision making. So the ultimate aim of any organization is mainly to earn the good profits. But for earning the good profits, the decision should be the right one. So if there is a mistake in the decision making, obviously it will give the bad results only. So that's why here in every areas of a business, decision making plays a very important role. So without having any analytical knowledge, you can't decide the things. So analytical knowledge is very, very important. That is going to be provided with the help of information provided by the management accounting system. So management accounting is an extension of management aspects of cost accounting. Obviously, as I said initially only, that is, financial accounting system is the root or a base for a accounting system, but at the same time, with that only the cost accounting has evolved. These two informations are going to be gathered in the form of some methods, or some techniques, some tools, or some things which are helpful for the preparation of the policies in the management accounting. So that's why it is said to be an accounting to assist the management. So here, management accounting system is not a mandatory for any organization to compulsorily they have to follow. It's not like that. It is only the option. If they are interested, then they can continue, or else there is no any compulsion to follow the management accounting system. It is only for the help or assist the management system for a decision making. For without having the prior information, prior planning, decision making is very impossible. So that's why for a good decision making, the important information is very much necessary. That information is going to be provided by the management. It employs the various techniques such as I said, like standard costing, budgetary control. Standard costing, as it is going to fix the standards, then actuals are to be compared, and then it is going to be whether it is favorable or unfavorable. These are all the things are going to be taken care. And at the same time, in case of the one more method, that is budgetary control. So here, for everything, they are going to plan the budget first for each and every work. Either it may be purchasing, storing, finance, marketing, research, or else even in case of the advertising or multi expenditures. So these are all the things at finance budget. For everything, budgets are going to be prepared, and by that you can control the cost. Marginal costing ratio. So here in this marginal costing ratio, the management accounting system is going to give you the best price to be offered to the additional unit of production. So here in the cost accounting system, it's not possible to make a changes in the prices of units. But with the help of this management accounting system, the techniques provided by the cost accounting and the information provided by the financial accounting system, it is going to evolve with a new system that is said to be like, as the volume increases, the prices of the unit is to be reduced. To what extent it has to be reduced? And it is going to vary the marginal costing. It is going to study the information with the help of this variable cost, fixed cost, and contribution. That is sales, variable cost, fixed cost, and contribution. These four important, that is S minus V equals to F plus or minus P. This equation is going to give the solution to the so many problems. May it be like advanced fixing of the profits, or the fixing of the budgeted sales, or fixing the best price to the large volume of a sales order, whether the sales order has to be accepted or rejected. These are all the things can be easily fixed with the help of this marginal costing systems. And analysis of consisting ratio, analysis of capital budgeting decisions, internal audit, these are all very easily can be followed with the help of a management accounting system. Then at the end we can say that management accounting system is a system for gathering the data and other financial information primarily for the internal needs of management. Means the management, the main aim of the management accounting system is to help the management in decision making. So if the decision is correct, right decision will brings the right result. So that's why the ultimate aim of any organization is to earn the volume of sales, is to earn the volume of profit. This can be increased with the help of a good decision making. Behind every good decision making, there is a management accounting system to assist the management in the form of gathering the data, accumulating the information, providing the communicating the information, preparing the reports, and then putting it into a execution, putting into an action plan can be properly followed with the help of this management accounting. Thank you, students.